America is the last great hope of the world. And this is the one thing that I think everybody really needs to understand. We are all now in this controlled decline, all countries. Controlled decline because we're all in it together. And we're all going to get down, and then we'll have a new idea for a new system. But since the end of World War II, and even more especially since the U.S. took the entire Western world off the gold standard when Nixon closed the Fed's window in 1971, the nations of the earth went on a binge of credit expansion. None of us would want to go back to the 1960s and live there because nobody really had anything. Nobody had big houses or big fancy cars. For a long time, it was the technological expansion that enabled massive population growth, mostly made this able to work. But for all the new currency that was created through ever more debt-denominated currencies, new populations were created to absorb, support, and repay that debt. New food was grown, new industries were created, new workers, new consumers, and all taxpayers. But what happens when the expanding debt dramatically starts to outpace, not with the rate of population growth, but the rate of productive population growth? Western first world populations capable of absorbing every expanding debt expansion peaked in 2009. Since that time, the populations for Germany, UK, France, Canada are flat. There is still population in expansion in the US, in Australia, and Italy and Greece. However, 81% of that population expansion is in those countries due to immigration. And the problem is it's from second and third world countries. Now, this is not a racial or cultural evaluation of immigration stats. What this is a cold look at economic facts. Immigrants from second or third world countries come to a modern Western civilization. It generally takes them 2 to 3 generations to be able to really absorb debt and credit expansion by contributing to the tax base and also the debt payment capacity. But as of Q2 this year, second quarter 2019, 94% of the yield on sovereign yield. Now, so you know, sovereign funds are like when Saudi Arabia, invests in another country or they invest in the stock market. That is a sovereign fund, and the yield is the money that they make. So, all of the money they're making, or most of the money they're making, is made on the United States of America. The United States of America also represents 81% of AAA corporate bond yield among G20 nations. So they're taking their money and they're investing in our stock market, and that gains 81% for them. And the 19% that's left is from other investments. 8 of the G20 nations now issue 50 or 100-year bonds at zero interest. So what that means is if you park $100 in Norway's 50-year bond, they're going to pay you $100 in 50 years. No matter what inflation does between now and then, you're only going to get $100. Who does that? 0 of the G20 nations project a balanced budget or positive budget over the next 20 years. China is the worst offender at negative 487% of GDP growth over 20 years. The U.S. is 10th at negative 68% of GDP growth over the next 20 years. So what that means is whatever our GDP is, no matter what we all make together, our gross domestic product, over the next 20 years, take 60% of what we created and add that to our debt. Among the G20 nations, 16 projected population declines by 2030. All 16 of those nations project government debt growth versus GDP over the same period. Nobody's going to have any money left.